Hey, it's Corey, and today I'm going to talk about an exciting topic: bookkeeping for rental properties. And specifically, I'm going to go back in time to before we had our somewhat bigger properties, where we've now kind of upgraded to an actual property management software, full scale, double entry bookkeeping, and it automates the rent collections and the payments and all the stuff, which we use Rent Manager for all of that. I'm going to go back to before that because that's kind of an expensive thing, and it's got a steep learning curve. And I'm going to talk about what we did before that, when I just had a few properties and I wanted an inexpensive, easy to use way to keep track of what was coming in, what's going out, what do I need the different money for that's coming in. Um, and also to try to make tax time easier, so I can easily just export what happened for the accountant. Eventually, with the sale of the property, being able to do P&Ls and that kind of thing are huge. And so there's kind of a hack that I'm going to show. So this is you need a budget, YNAB. And this is supposed to be a personal finance software. It's great for that. I use it for my own finances already, which is why I went with it, why we chose to use it. If you're already paying the subscription, I think it's like $100 a year or something. You can set up what they call budgets, and you can do just as many as you want. And so what I figured out was you can do each of these budgets for each of your LLCs, and you can actually do a pretty darn good job for no extra money than what I was already using for my personal stuff. And for $100 a year is cheaper than a lot of the other stuff out there. You do a pretty good job of keeping track of your bookkeeping, but you have to hack it a little bit because it's not technically meant for that. But it's real easy to do. It's nice in that it links with your credit cards and your banks. So it automatically imports transactions. You can categorize things. You can run reports. It's pretty nice. So I'm going to dive into how we did that in this one. I guess just to start off, the way this works in a normal, like in a personal finance standpoint, is you have your different budgets that they call them, which are effectively like your expense categories. But your income, it doesn't categorize your income for you, which is a problem when it comes to the business. So usually you just categorize, if you have an expense coming in, you would categorize that as this ready to assign category, and it just lumps all of your income into there. And then the way YNAB works is it has you, then you have to have the cash in your bank, but you then assign that cash to the different expense categories that you want to use that cash for. And it's kind of like being mindful of giving every dollar a job, and being very mindful of like making sure you have the money for your upcoming expenses, and not just seeing this big balance in a bank and thinking you can go blow it on some fancy thing for your business, but actually, budgeting for the expenses that you have coming. So that's kind of the idea behind it. So to get it to work for a business, the really the only big major tweak that you have to do to it is you need to have a way to categorize your income. And that's not too hard. What you need to do, you can come in here, you can set up any categories you want, category groups and categories. There's all these categories here. You got expenses, rental income. And then within each group, you can have different categories. So you just need to make some income categories as well as your expense categories. And then when money comes in, I'll show you. I haven't used this in a few years, so some of the stuff in here is probably a little dated. But and this is my actual account for a rental property that I had. So you can see for some inflows, I'm going to go down here way back when I actually, before we sold the property, when we actually had it, I'm going to use kind of 2019 as an example. We had some inflows. Let's see here. I categorized it that was transfers. This is all like the selling stuff. Sorry, let me find some actual, those legal fees. Note category. Yeah. So here's like some note. So we had some note income. So this was a home that we had financed for somebody and they were making note payments on it. So we categorized it as a note for that one. I'm trying to go back to when we had rent payments coming in. Oh, you know what? It would be in the rental. So we had a property manager at this property. That's what it is. Sorry. So that's where we had the money coming in. So I tracked the property management account too, and then our bank account. So I'm going to go back to 2019. I'm just going to use 2019 as the example. So you can see here, like I just kept track of this person here, Carla, and I would get a statement every month from the property manager and just go enter this stuff in here. So this person paid rent at unit number 6. This was a 12 lot mobile home park. And that was how much money it was. And so this would get credited in that month, in this like November of 2019, for example. This guy's rent would get credited to number 6. And so you would just, instead of like in a normal YNAB, you would give all these things. You would say ready to assign. In this case, we're not going to do that. We're going to give it an actual category on the deposits. That's really the difference. And then to make that work, what happens then is when you go into your budget. So here is 2019. I'm going to actually go to that same month so that we're looking at it. Here's 2019. You can see rental income. Before I unbudgeted it, this was 925. I'm going to zero it out. So it would look like this. And his account would show, so it would show we had $925 of activity on this category, and it would show that you have $925 now budgeted to here. So if you want to move the money up to your ready to assign, so you can go ahead and assign that to expenses below, then you just have to negative budget it. So this is the weird little hack that you kind of just have to do to get it to work. Negative 925. And now it'll pull it up to here to ready assign. And then you can come down here and put it in your expenses. So that's really, that's the only other thing. Other than that, you go to your different accounts, you enter your things. If it's an actual bank account that you can link, like these two are, like credit cards, it'll automatically import them. If it's a vendor that it's paid before, it'll try to automatically categorize it for you, and it'll ask you, what that category should be, and you can match them up. And it does a really good job. It makes it really easy to stay on top of stuff. And then for your expenses, what's really nice is, like, so here's my Alturas expenses. I set up some categories in here, where I set up, I probably should have, in hindsight, I probably would have broken the loan out as far as interest and principal, if you wanted to do a real P&L. But I broke it out as like operating expenses for the park, and then basically other. So these would be kind of like non-operating expenses if you were using a traditional P&L. And so this way, and I tried to mimic, what I tried to do with these categories was mimic the categories, to the best extent I could. I'd mimic the categories on your Schedule E. We were using a Schedule E in our for taxes. So at tax time, you could run a report. I could come in here and say from 2019 January to December. 2019 January to December. What happened? I want to go. Sorry, income and expense. And let's change these 2019. And here you go. So here's all the income that came in on the different units. And you've got January over through the end of the year with your totals, your averages. You've got your expenses. So I can look at all the different expenses. So I can see, here's my total expenses for every month. Here's my total rental income for every month. Here's what went out in the commercial loan. You can take this minus these two and get your cash flow, or you can take this minus that and get your NOI. Pretty straightforward. And you can even come up here, like if you wanted NOI, for example. So I don't want my overhead. I don't want any distributions. I don't want my loan payment. You can just come up here and say, I only want to see rental income from Alturas and expenses from Alturas. That's it. And so then here's your income, here's your expenses, and then down at the bottom, here's your net operating income for each month. So you can see in 2019, we had about a $45,000 net operating income. If you want to see your cash flow, then you would just turn the loan statement back on, your loan payment. So here's like my commercial loan, and you could see we cash flowed $23,500 because we paid $21,900 in loans on this property. So it's pretty slick. It's once you get it, it takes a little bit of work to get it's not that hard, but you just got to figure out what categories you want in here, income categories and expense categories to track. And like I said, I recommend mimicking that tax return because that makes it easy come tax time. And I also recommend doing a separate category group for your non-operating expenses so that you can easily pull out your property NOI, which is handy if you want to sell it. So it's real easy to be able, boom, here's my NOI. You can export this stuff to a spreadsheet and do other calculations. You can export all your transactions for your businesses or your accounts to a spreadsheet. So it's real easy at the end of the day to calculate an IRR. You can just export, here's all the money in, here's all the money out, sum it up and do an XIRR function in Excel. It's pretty slick, pretty easy. It's super cheap. It's like $100 a year. I think that beats most of the other accounting software out there. It's not technically double entry accounting. You can't, the residents aren't, there's no portal website here for residents to log on and pay their rent. You can't click a button in here and have it automatically pay your vendors for you. But if you just want some accounting and you want something simple and you've got 2, 3, 4, 5 properties, this is pretty good. The other thing I would show, I would do a separate budget for each LLC so you can run all these reports. That's what I did. But you could have more than one property in an LLC. So for this one, I think they're hidden. I'm going to unhide them. We actually had we had bought and sold a few different properties within this LLC. We started with just the one, but then we bought a few more and 1031 and did some other stuff. So you can just basically make up a separate category group for each property. So we had like our 39th Street property, we had a rental income thing. We had another one for this property, this property. And then so you just have a different category group for the income and the expenses on each one of those. And that makes your reporting super easy. So I hope that was helpful. I love to chat about this stuff. So if anybody's out there with a couple rental properties trying to figure out and you think you want to do this, hit me up. Let's chat. Cheers. Good luck. Happy bookkeeping.